What is going on, ladies and gentlemen? Welcome back to another episode of the Jack Mallers Show. Guess what my name is? If you guessed Jack, you are correct. It is Mailbag Monday, 6 p.m. Eastern, 5 p.m. Central, 3 p.m. Pacific. Ooh, my voice a little bit. The dip brought my vocal cords down with it. But it's good to see you guys, and boy, do we have an exciting episode. A lot to talk about it before we get started. Our usual kickoff. I'm talking to you all at a Bitcoin price of $86,770, a bit of a dip. Bitcoin's market cap sits at 1.73 trillion US dollars. All-time high remains at that $126,160 that we set 56 days ago. That was a Monday. It was actually set on this show, October 6th, 2025. We are 31% off that all-time high. Bitcoin block height. What was the last Bitcoin block mined so that we can timestamp this episode in Bitcoin time? It was Bitcoin block 926,065. Jeez, let me get a sip of water. What the hell? It's going to be a long show if I sound like a rat. How's everybody doing? I hope you all had a wonderful Thanksgiving. Oh, by the way, look at this little thing I have in front of my microphone. You know, I'm a man of the people, they say. I didn't say that. They said that. I read all the YouTube comments. I read all the tweets. And you guys were like, dude, you got to get this thing that sits in front of your mic because when you start screaming at us, it hurts our ears. And this thing helps. I don't know. I'm not a professional podcaster, but I bought it. I bought it on Amazon. So we're increasing our podcasting game. Let me know if you guys can hear me correctly because I think I set it up right. But it wouldn't shock me if I didn't. But without further ado, let's go. The title of today's episode, What Bitcoin Tells Us About Japan. You might have heard about Japan in the news. You've heard me talk about Japan before. We're going to talk a lot about Japan today and how this Bitcoin correction, because at the end of the day, you know, whether I think it's worth our time or not, you guys love when I talk about the price, okay? I think the price is going to go up over time no matter what. Bitcoin is competing to be money. Money wants to be one. I think that one will be Bitcoin. The short-term price action means little to nothing to me. But I am happy to talk about the macro environment that drives the price action. Very specifically, this last dip, in my humble opinion, we all know exactly why Bitcoin fell sharply last night. And I'm happy to talk about that. It has a lot to do with Japan. Okay, really quick. This is unique to this episode. Before I get started in ranting and raving and screaming about Japan, 21. Usually I talk about my businesses at the end of the episode, but you guys for the last 6 months, maybe longer, 7 months maybe, have been asking me, when 21, when 21, when 21. Let me speak on it briefly in the beginning so that everyone that has an interest in it can hear it. They don't have to wait an hour, okay? What is 21? 21 is a company I co-founded with Tether. SoftBank is a minority but significant investor. They put about $1 billion into the business. It is a de-SPAC. It means we are de-SPACing, combining with Cantor Equity Partners, okay? And the reason I can't talk about it too much and the reason it isn't actually live yet and trading on a stock exchange under the ticker XXI, which we hope to be our ticker symbol, is because this combination between Cantor Equity Partners and 21 has been ongoing. It needs approval from entities like the SEC, and we are in a quiet period where during this process, I can't run my mouth and tell you guys all that we're going to do and tell you what we're working on and give you insights into the business or KPIs into the business and how much money we're making. I wasn't allowed to do any of that, okay? Still not, to be clear. However, what I can now tell you guys is that our shareholder vote is December 3rd. So the way these de-SPAC things work is the shareholders approve whether the business combination actually goes forward or not. Oops, wrong button. So the Cantor Equity Partners shareholder meeting to approve the combination with 21, with my company, is December 3rd. Today's December 1st, so it is in 2 days. The really exciting thing about Cantor Equity Partners, and since we've launched the proposal to combine businesses, is majority of the stock is held by retail, is held by you guys, which I think is unbelievably cool. A lot of the times when you do these type of shareholder votes to approve a de-SPAC, it doesn't actually matter because all of the equity is concentrated in institutional investors. Who cares for the vote? Because the vote is between two institutional investors that already talk to each other every day and approved it. Ours is not. This is an equity of the people. Well, really what we've always wanted it to be, and what I think it will become, is the Bitcoin equity. We want to be, as I've said, the best version of Coinbase, which is a cash-generating business. We aren't interested in shit coins. We aren't interested in creating a speculative mania. We're interested in Bitcoin. But we do appreciate that businesses like Coinbase have cash flow. They have operating cash flow. And MicroStrategy. MicroStrategy is one of the largest Bitcoin holders, or it is the largest Bitcoin holder in the world. They've done a tremendous job at being very aggressive in building a large stash of Bitcoin. We think we can combine those two. We can be an incredible Bitcoin operating company with high growth, high margin, profit cash flow that can help then finance our ability to be one of the top, if not the top owners of Bitcoin in the world. We want to be the Bitcoin equity. And that means we hope, at least I hope, that Bitcoiners are our shareholders. So, anyways, all of that to say, vote on the approval if you're interested. Now, I have to be very clear. I can't tell you how to vote. It's not my prerogative to tell you how to vote. You make that decision on your own. But what I can do is say, hey, this is the last step before 21 goes public on a stock exchange and the ticker XXI is up. And then I exit my quiet period and we are able to then build the business in the capital markets. So when you guys ask me every episode, it's the most asked question I get. When 21, when 21, when 21? Well, assuming our shareholder vote goes well on December 3rd, then 21 will commence in going public, hopefully very shortly after that. So if you are a shareholder and you know other shareholders, make sure they're aware of the vote. And once the vote commences, which is on Wednesday, I hope to have extremely exciting news thereafter, but can't tell you guys how to vote. I don't control the vote. And I can only share that much. But I did want to make sure I get that out there. I know that this is a little unusual that I start an episode this way, but this is a very unusual event and that I'm attempting to take my company public in partnership with SoftBank and co-founding it with Tether. It's one of the biggest stories to hit Wall Street this year. We're very excited about it, and I want you guys to be aware because when we check our data, you guys are our shareholders. And again, this is a shareholder vote. This is a stock built by Bitcoiners, for Bitcoiners, by the people, for the people. So if you guys have questions, please ask them. I will do Q&A at the end, but I did want to make sure that people didn't have to wait an hour and a half or longer to get that information because it is obviously important. You guys have been waiting a very long time for this transaction to go through. Okay, next. First chapter of this episode, the Bank of Japan, the quiet puppeteer of global risk. So let's talk about Japan's relationship with Bitcoin. So this tweet from Arthur, BTC dumped because the Bank of Japan put December rate hike in play. USD JPY 155 to 160 makes the Bank of Japan hawkish. What is he talking about and what are you guys looking at? So for those listening on the podcast waves that are not viewing the screen I'm sharing, what we're looking at is in white BTC USD. So the price of Bitcoin, and you can see it stagnating sideways, a little bit of up chop, a little bit of down chop, and then it looks like it got shot and fell off a cliff. What are we looking at in orange, weirdly? That is the dollar yen currency rate. Weirdly, guys, it shows very similar pattern. A little chop, but mostly sideways, and then it looks like it got shot and fell off a cliff at the same exact second. What's going on? What is this relationship? This from Zero Hedge. Central banks have completely messed up market messaging. First, the Federal Reserve's schizophrenic communications sent December rate cut odds from 80%, then to 30%, then 100%. And we've talked about this on the show. December rate cuts for the Fed, for the US dollar, were guaranteed, and then they backed off it and Bitcoin freaked out, and now they're back to guaranteed. And now the Bank of Japan just sent December rate hike odds to 80%, down from 20% only 10 days ago. So the cost of capital, the cost of money, the price of money, there's really two ways to think about liquidity globally, macroeconomics, fiat. There is one, what is the price of money? And two, what is the supply of said money? Now, traditionally, I'm more interested in the latter, in the supply of said money. Why am I interested in that? Well, we've seen Bitcoin go from 16K to 126K while rates were at 4+% in the United States. And that was on the back of the fastest rate hike ever. And I've explained on the show, the reason Bitcoin was able to rally so much is because liquidity came from the US Treasury. This idea of fiscal dominance. Global sovereigns, and specifically the United States, is so indebted that it has to find liquidity at all costs. It can't solely rely on the Fed anymore. You get this idea of fiscal dominance when the US government is really driving policy for money. So to me, the quantity of money has been more important and will continue to be more important. But the other very important variable is the price of said money. And the price of said money is set by central banks, and that is known as the rate. And so what we're seeing is all of a sudden, Japan went from very likely not to hike rates to very, very likely to hike rates overnight. Now, why is Japan hiking rates relevant to Bitcoin at all? It is so funny typing out these titles like, what does Bitcoin, this magic internet money that this anonymous person leaked on a mailing list, tell me about Japan, this country on the other side of the world, as I sit in Chicago? Well, let me tell you. So I read this tweet. This chart is single-handedly bringing the entire crypto market down. Japan 10-year bond yield is now at its highest level since 2008. Bank of Japan is about to do a rate hike at the next meeting, which will make things worse. Cheap borrowing will be over, and people will sell their assets to repay the debt. Crypto is the most liquid asset, so it's dumping the most. I think we can soon see the impact in other risk assets as well. So this, guys, I'm actually going to skip to this slide. This has happened before to this industry. And I've referenced it, and I want to spend a little bit of time talking about it. It's called the carry trade. The idea is Japan has been the cheapest capital to borrow in the world because rates have been set literally at zero. Sometimes they've been negative, where you get paid to borrow money. And even as they have hiked rates as of recent, the rates are still unbelievably small. Why is that relevant? Well, what the carry trade is you source capital, you borrow money in Japanese markets, in yen, and you invest that money into risk that performs and out-returns the rate. So, common thing to do is to borrow yen and buy the Mag 7, buy the S&P 500, buy NVIDIA, buy Bitcoin. You're taking free money. Think about what Michael Saylor has done. What was the innovation initially? He was raising money at 0%. Would you borrow $1 billion if it cost you nothing? Probably. I would. In fact, I am. That's a lot of what 21 plans to do. And so there was what's known as a carry trade. The carry trade is very simply borrow where the capital is cheap. When the US has interest rates at 4+%, that's not cheap. When the yen is at interest rates of 0 or negative, that's cheap. Now, as the yen strengthens, or as the cost of the yen, the cost to borrow strengthens and rates go up, this trade starts to unwind. Okay? And so all of this to say, the reason why the title of this episode is What Bitcoin Tells Us About Japan, the yen is the world's margin loan. The yen has played a very critical part in global liquidity. Okay? The yen has supported risk assets very, very, very much so. Where if this trade starts to unwind because Japan has to raise rates, it will be very bad for assets, particularly risk assets. And so as I always say on this show, what does Bitcoin do a phenomenal job at? Telling us the truth. Bitcoin's unbelievable, the best in the world at being a free market that can be honest and that can tell us the truth. So, what is Bitcoin telling us? Global liquidity, no bueno. So I read the tweet. In July 2024, the Fed cut rates while the Bank of Japan raised rates, leading to the unwind of the carry trade. Bitcoin capitulated into it and found a low 1 week later. Good chance this happens again on December 10th. The Fed cuts and the Bank of Japan raises rates. So maybe Bitcoin finds a low mid-December. Now, the point of this is not to tell you guys Bitcoin's going to find a low in mid-December. I've said it once, I'll say it again. I have no fucking idea what Bitcoin's going to do in the short term. No idea. Nor do I think it's that important. If what Bitcoin's going to do over the next few weeks is that important to you, you should be very careful. You should probably get a little bit more humble and stack a little more sats. But what I think is interesting and what we talk about on the show a lot is understanding the world around us, understanding the indebted sovereigns, understanding how they're printing money, where they're printing money. Because the mainstream media is lying to us, it's really difficult to find a source of truth. And so when you see things like, oh, Bitcoin's run, what do all the traders on Twitter like to say? This is a dead cat bounce. I don't even know what that means. This is a dead cat. Okay, well, listen, and people say, the bull runs over. This is a dead cat. See that cat on the ground? It's dead. Bull runs over. I say, okay, well, no, listen. If the carry trade, if Japan is going to go from 20% chance to raise rates to 80%, and it's going to impact the carry trade, Bitcoin is going to start screaming first because it is the liquidity smoke alarm. It is the only free market. It is the truth source we have globally. That's what's happening. Make no mistake, I don't know anything. I'm allergic to cats. Literally, I am. You learn something new about me every single week. I am physically allergic to cats. I can't be around cats. So I know nothing about a dead cat bouncing. I know nothing about it. So the point is, we're in the middle of a liquidity crunch. Again, that's kind of been my consistent theme, is that today QT ended. So first of all, for all of you, QT ended today, quantitative tightening. Quantitative easing, QE, is very likely to resume in the near term. We're very likely to get rate cuts going forward. Trump now knows, he said and communicated, I know exactly who I want as my Fed chair. We have looser regulations for the banks. They're going to be allowed to use unlimited leverage for treasuries, create a lot of credit, create a lot of new money. We have 50-year mortgage. We have stimulus checks. We have midterms. I think that the liquidity cycle at the central bank level is bottoming out. It's about to turn back up. We have been tightening monetary policy for years now. And despite that, Bitcoin's been able to make new highs. And again, that's because of the level indebtedness and the fiscal dominance. When you combine the two, I stand by it. I know I take a lot of shit for it. I continue to say I think this cycle is 250K to $1 million. Sue me. And if I'm wrong, then yeah, we're looking at a dead cat that's bouncing or whatever, and the cycle's over. I fundamentally disagree with that. Why did Bitcoin go down? What's going on? Is a dead cat bouncing? No. Oh, my girlfriend's turning off lights accidentally. My dead cat is not bouncing. The Japanese central bank is going to have to tighten rates. And this brings us all the way back to the Fed, the United States, and it helps us understand a lot of the fighting. So I'll read this last slide. We've gone from guaranteed December cut a month ago to not cut last week, back to a likely cut now, all without any meaningful new economic data as the shutdown fallout continues. The Fed's communication process seriously needs to be revamped. This is absurd. And so if you guys want to understand why Donald Trump, why Scott Bessent, why these guys have been aggressively campaigning for a lower rate, a lower Fed rate, and more aggressive monetary policy, is because they need a weaker dollar. They really desperately need the dollar to weaken and for the Fed to cut if Japan is going to have to hike. They need looser monetary policy. It's really going to take a very tightly correlated effort from the Fed and from the U.S. Treasury to financially engineer their way out of this with the least amount of pain. There will be pain, undoubtedly. There has to be pain. The question is how much, and the question is to who. And the question they're asking themselves is, can we get reelected despite it? And so my expectation is, well, first of all, we'll see how the next week plays out. Bitcoin is front-running risk assets. If Bitcoin remains this low and liquidity is not injected and the Bank of Japan does not revert on the expected rate hike and nothing gets aggressive on the U.S. side, the stock market will melt down and will fall as well. All risk. Let me check my phone, actually. I assume the stock market, everything got murdered, guys. Stock market down, NASDAQ down, everything down. Everything down. And again, this is not voodoo magic. These are not dead cats. This is very simply explained to global liquidity. That's what you'll get on this show. A guy that's allergic to cats but understands macroeconomics. Says everything to do with Japan, the yen, and the global carry trade. The yen is the world's margin. 100%. And so we will see how long this is allowed to persist for. But my message continues. Buy every dip. The United States cannot afford to have assets go down over a persistent time frame. The U.S. stock market is a Ponzi retirement account for the United States. They need it to both store wealth for Americans and for Americans to monetize wealth where they earn tax receipts. If the U.S. doesn't have a stock market that's up 10 to 15% a year, it is insolvent because it cannot afford the interest payments on its debt. So all dips should be bought. We are living through a prolonged fiscal dominant cycle. None of these dips scream Bitcoin's going to 10K. None of these dips are talking about cats. This is all to do with global liquidity. And I know it sounds weird, but what Bitcoin is telling us right now has everything to do with Japan. Cool? Ask questions in the chat. I'm going to move on to AI. Bubble, revolution, or both? I'm going to kind of use AI to blend in my final sort of prediction / analysis of what the United States is going to do between now and midterms. But let's talk about AI briefly because so this came out. Again, it feels like every episode I have a new article which looks like the same headline. This time it's HP. HP to cut up to 10% of workforce as part of AI push. The computer and printer maker expects the restructuring to affect about 4,000 to 6,000 employees. This is from the Wall Street Journal for those listening on the podcast airwaves. The article opens with HP plans to cut up to 10% of its workforce as it invests further in artificial intelligence, a move its chief executive sees as essential to maintaining its competitive edge. The computer and printer maker estimates about 4,000 to 6,000 employees will be affected by the end of the fiscal year 2028. It employed about 58,000 people as of its latest annual filing. Chief Executive Enrique Lores said that the restructuring plan is part of a push to adopt AI across the company to accelerate product and software development, as well as automate customer support and some internal processes. Quote, "We really think this is a unique opportunity we cannot miss to really continue to transform the company and continue to be competitive for the next 10 to 20 years. End quote. This also comes on the back of this New York Times hit piece, seemingly, on David Sachs, the AI crypto czar. So the title of the New York Times article, Silicon Valley's man in the White House is benefiting himself and his friends. David Sachs, the Trump administration's AI and crypto czar, has helped formulate policies that aid his Silicon Valley friends in many of his own tech investments. Okay. Let me just try and cut through the fat here for you guys because, a lot of the value that I see in this show, a lot of the uniqueness that I think I can bring to the global conversation, surely you guys have a bunch of podcasts in your ears throughout the week, right? I don't consider it cheating if you're listening to other podcasts. But what I think is different about this show is I don't have any advertisers. This doesn't finance my life. I'm not hosting this show with a bunch of other tech bros that have, certain interests, vested interests that I'm not disclosing. It's just me. And you guys know my vested interests. It's Bitcoin. It's freedom. I want to live in a fair, equitable, prosperous world. That's what I want. And I think Bitcoin's the best vehicle for us to achieve that. And that's my only prerogative. And so I have an ability. I make my own money. I've built my own companies. So I have an ability to say whatever the fuck I want and tell you the truth. Here's the truth. The truth is the US government is going to have to bail out AI. Now, do I think David Sachs is in the White House helping out his friends? I think this was a hit piece. He is, though, doing that. But I think what the American people need to really understand is that AI, the government can't afford to have AI fail. As we've talked about, and I'll show in a later slide, AI has been half of the US economy as of recent. If AI were to fail and collapse, we would go into one of the greatest recessions of all time. We'd likely go into a depression. The US government cannot afford for the stock market to go down and persist down. The US government cannot afford to have AI fail. And the American people need to understand this because, one, it implies an incredible amount of debasement to their currency, to their base money. Secondly, it implies that a lot of these tech oligarchs are going to see an insane amount of concentrated wealth because they're going to extract wealth out of the white-collar job, out of the white-collar worker. As I've said before, China disrupted Red America. So the non-university educated manual labor American, the Rust Belt, they all lost their jobs to China. The iPhone is made in China, not in America. Now, the white-collar worker, the university-educated worker, they are actively losing their jobs to AI at a rapid rate. And the government has to ensure that continues. So let me just kind of walk you guys through this timeline here. So I want to play this. Now catch the timestamps on here. This is Sam Altman, who I'll go on to explain, I think is the new SBF. And I can't say that lightly, so I'm going to explain it. I don't feel bad for saying that, though, because I believe it. And but let me have a chance to explain myself. But let's first listen to this clip. The timestamp is very important. November 6th. So not quite a month ago, but about a month ago from my recording of this. November 6th. Okay? Let's listen.
Level, when something gets sufficiently huge, whether or not they are on paper, the federal government is kind of the insurer of last resort, as we've seen in various financial crises and insurance companies screwing things up. So I guess, given the magnitude of what I expect AI economic impact to look like, I do think the government ends up as the insurer of last resort.
Okay, so Sam goes on to say the government is going to have to insure AI and bail it out and be this infinite backstop to what we're doing. Okay. And then I don't know if you guys remember this, but OpenAI then issued a press release effectively seeking government backing. So this was the Bloomberg terminal. Let me zoom into this real quick. OpenAI seeks government backing to boost AI investments. November 5th, ChatGPT operator OpenAI, the world's largest private company, is asking the US government to provide loan guarantees for its massive infrastructure expansion that will eventually cost it more than $1 trillion. Speaking at a Wall Street Journal business conference, OpenAI CFO Sarah Fryer explained that government backing could help attract the enormous investment needed for AI computing and infrastructure, given the uncertain lifespan of AI data centers. This is where we're looking for an ecosystem of banks, private equity, and maybe even the government. Okay, the tweet reads, "I smell a rat. Why does Sam Altman and OpenAI need the taxpayer to guarantee their debt if they are going to make hundreds and hundreds of billions of dollars? Has he just done a cash analysis and realized he's short on cash flow?" And my analogy to Sam Bankman-Fried is that nothing this guy ever does makes any sense, ever. Anything he says, any of the math he's doing, it never makes any fucking sense, ever. And it was always, actually, I should have included this in my, I should have included this in my presentation, but we'll just do it live. Oh, this will be really embarrassing too. Jack Mallers, Sam Bankman-Fried. So I did a, we're live now. There we are. No. All right. I'm going to have to, this is going to be embarrassing. I'm going to have to show you guys my personal YouTube channel that has all of my chess videos from when I was in college. But you guys make fun of me enough. It's fine. Here's some strike videos. These are all hilarious videos. These videos I used to record when I was in college for like the month I was playing chess. Anyway, cat's out of the bag. This is my personal YouTube channel. But I uploaded, here it is. So I did an interview with Business Insider. Guys, this was in June of 2022. When did FTX collapse? November of 2022. So I did an interview with Business Insider where they asked me basically, what do you think of Sam Bankman-Fried? Because everything he's saying Bitcoin sucks, the Lightning Network doesn't work. He's basically saying everything you believe in, like proof of work, Bitcoin, hard money, cash flow, profits. He's calling it all a scam, and he's effectively saying you're an idiot. And I did this interview. Let me play this to get through the ads. I did this interview with Business Insider, and I basically said, you guys can watch it. A little embarrassing. I'm wearing a beanie. I've grown up a little since. But I did the interview, and I trashed him. I said, listen, from what I can tell, this guy's full of shit. I think he's a scammer. I think there's something seriously wrong with what's going on in FTX. Business Insider never aired the interview. That's why I published it on my YouTube channel. They never aired it. I later learned that Sam had paid off a lot of this media to not publish negative stories on him. So I was trying to scream from the rooftops, something is fucking wrong with this guy. Nothing he's saying makes any sense, okay? And I was calling it in June. They collapsed in November. Okay. I give you guys this context to say I have a very similar vibe about this Sam Altman guy. Now, one caveat, one disclaimer. I'm not an AI expert. I do consider myself a Bitcoin professional, meaning I run 2 Bitcoin companies. I think I know enough to have a credible opinion on Bitcoin. So I felt very strongly about Sam Bankman-Fried. The new Sam Altman, I'm a Bitcoiner talking about AI. I'm not an AI guy talking about AI. So I am a bleacher speculator. I'm sitting in the crowd. I'm sitting in the stands. I'm not on the field. I'm not playing. So discount my opinion slightly because this is more of a macro podcast. I'm not enough of an expert to speak with as much conviction as I was, but I do want to sound the alarm a little bit and say, this guy, I think nothing he says makes any sense financially, his plans. And he then, this was around that November 6th date, they went out and sought explicit government backing. Okay. The next day, when everyone was like, hey man, what the fuck? I thought your startup was so cool and you're so much smarter than everyone and Elon is wrong about you and you're such a great guy and you're nice and he's mean. Now you need the American taxpayer to build your startup? What the fuck? And he goes on to write, I would like to clarify a few things. First, the obvious one. We do not have or want government guarantees. First of all, asshole. It's not obvious, given you explicitly asked for it twice. And he literally said it in this clip. Again, this is the type of Sam Bankman-Fried shit where you're like watching this guy do commercials with Tom Brady and get on stage with Bill Clinton. And you're like, okay, let's rein it in a little bit. You literally just, to our face, said you think the U.S. government should backstop AI. And then you open with such condescending, manipulative bullshit. Let me state the obvious. I never said that. Brother, I just played the clip. You just fucking said that. We believe that governments should not pick winners or losers, and the taxpayers should not bail out companies that make bad business decisions or otherwise lose in the market. If one company fails, other companies will do good work. What we do think might make sense if governments building and owning their own AI infrastructure, but then the upside of that should flow to the government as well. Okay, so you want nationalized AI. You want utility AI, where the Mag 7 just becomes utility companies like JP Morgan Chase, Bank of America. All these banks have been fully nationalized. Nonetheless, again, smells like shit, smells bad, doesn't smell good. David Sachs then comes out as the crypto AI guy in the White House, whatever that title is. I don't totally understand it, but whatever, that's fine. I don't understand a lot of government. He says, there will be no federal bailout for AI. The U.S. has at least 5 major frontier model companies. If one fails, others will take its place. Perfect. Man of the free markets. Man of the people. Great. Resolved that issue. It looked like OpenAI is going to just fail because they signed up for $1 trillion worth of payments that they can't pay. And given they're not going to get bailed out, they're just failing. 2 weeks later, we get this article from the Wall Street Journal. How the U.S. economy has become hooked on AI spending. Growth has been bolstered by data center investment and stock market wealth. A reversal could raise the risk of a recession. The same guy, 2 weeks later, says, according to today's Wall Street Journal, AI-related investment accounts for half, 50%, 50, not 15, 50. Half of our GDP growth. A reversal would risk recession. And then the guy who's in the White House, whose job is to oversee and create regulation for AI, says we can't afford to go backwards. What does that sound like to you guys? That sounds like a government backstop, right? And so my AI point is this. Listen, the U.S. government can't afford for the stock market to go down. We did that last episode. This episode, was that a hit piece on David Sachs? Yes. Is David Sachs a greedy bad guy? No, as far as I'm concerned, he's not. I've never met him. I can't speak personally about it. He seems like a fine guy, 100%. And the fact that he could make a ton of money in the private sector, building businesses and investing in businesses, and he went to the public sector to try and help, that seems like a noble thing to do, and I respect that. I've told you guys before, I was thinking about, and sometimes do think about, being the mayor of Chicago, for example, making that leap into the public sector to try and enter the body of the beast and help fix what's seemingly so fucked up. So I respect that from him. However, this is the truth. You know, the internet lives at both sides of these extremes, right? Where one side, it's like, this guy's enriching his friends. He's really secretly working for Elon Musk. He's like a big tech plant in the White House. And the other side is, everyone's out against big tech. I'm the nicest guy on planet Earth. I would never do anything wrong to the American taxpayer. The truth is probably somewhere in the middle. At least I'm calling balls and strikes on this episode. That's how I see it. I just walked you guys through a timeline over the last month of very explicitly asking for government bailout and this new version of SBF. We're like, wait a second, nothing this guy says ever makes sense, and his lies are such egregious lies. Like, first things first, let me start out by saying I never said that. Bro, the fact that you could tweet that makes you by default psychopath, because you literally just fucking said that. You have to have some level of psychopath in your brain to think you can get away. Like, How dumb do you think I am? That's what I literally, like with Sam Bankman-Fried, I thought, like, how dumb do you think I am? Now, unfortunately, a lot of people were really fucking dumb. But the point of this show is to try and educate. This guy thinks we're stupid. And so then they come out only for like 2 weeks and say, no, we're not backstopping anything. Only to go full 180 to where now the U.S. government is in a position where it has to backstop AI, it has to backstop the stock market, which brings me to my last chapter, which is which way Western man? Because listen, the U.S. government, so half of U.S. GDP has been these AI data center buildouts, okay? So the economic growth that we're seeing, that Trump is bragging about, stock market's all-time highs, economy's never been better under Trump. Under Biden, it was a sleepy stock market. Now it's a wide-awake stock market. He's bragging about a tiny little sector of the economy. He's bragging about these tech oligarch elites that are hyper-concentrating wealth in all their AI shit. And now they're getting a government backstop. What about the average American person? What about the everyday man? Hardship withdrawals from 401ks are at the highest point they have ever been. People withdrawing from their 401k because they're fucked. What about this? U.S. foreclosures are up 20% from last year as Americans struggle with mortgage payments and rising costs. U.S. subprime auto loan delinquencies are at their worst level in more than 30 years. What about this one? This is from that new piece, that Mike Green guy. He wrote this really interesting piece. You guys should read it. Highly recommend. And he writes, which means if you measured income inadequacy, today, the way Orshansky measured it in 1963, the threshold for a family of four would not be $31,000. So you get this like, what's the, what level of income for your household are you completely screwed? And what we're told over and over is $31,000. And we're like, okay, well, like the average income isn't that low. So there's only a very small fraction of the United States, of the American people, of the American taxpayer that is getting utterly and completely destroyed by inflation and asset inflation and the concentrated of wealth, not only into the elites and the asset holders, but now into the ultra elites, the AI guys that are getting default government backstops to spend $1 trillion. Give me a fucking $1 trillion. I'll buy so much goddamn Bitcoin, it's not even funny. His article goes on and says it would be somewhere between $130,000 and $150,000, not $31,000. And remember, Orshansky was only trying to define too little. She was identifying crisis, not sufficiency. If the crisis threshold, the floor below which families cannot function, is honestly updated to current spending patterns, it lands at $140,000. That's the crisis threshold you need to be earning in your home to not be going through the worst version of humanity. What does that tell you about the $31,000 line we still use? It tells you we are measuring starvation. Quote, an imbalance between rich and poor is the oldest and most fatal ailment of all republics. End quote. So the which way Western man is, listen, as I've said on the show a million times, we're living in a dual economy. Part of America has been in a deep recession for a long time, for years. And I've made the point earlier, yes, your stocks are at all-time highs, bro. But against gold, they're getting crushed. And when we actually had a depression, the Great Depression, the dollar was backed by gold. And so if by proxy, what you need to measure are your stocks in gold and not in dollars, you're living through a Great Depression right now because the stock market's gotten obliterated against Bitcoin and gold. You're living through a depression. You just can't see it. Hardship withdrawals out of 401k, all-time highs. No one can afford their mortgage. No one can afford their car. And everyone's realizing unless your household income is 140 grand, you are in crisis. The crisis threshold for the American family. So I thought this data was interesting. So there, first of all, I'll go bottom to top here. Tariffs contributed to spending increase. So you guys probably saw Black Friday, record levels of spending. Not really though. Pull on that thread, double click. The article reads, the impact of tariffs can be seen in the Black Friday data. According to Salesforce, average selling prices were up 7% year over year, while order volumes were down 1%. Black Friday delivered an important signal for the U.S. economy. On the surface, sales were strong, hitting $18 billion, a 3% jump year over year. But with the average selling price for goods climbing 7%, U.S. shoppers continued to feel the bite of inflation. Let me try and rephrase this in language the world can understand. In dollar terms, jumping 3% year over year is actually a decline if the things you're selling are 7% more expensive. 3 is less than 7. So Luke Groman writes, he writes, shout out to all the bondholders that are holding 10-year U.S. Treasuries at 4% yields, while the average selling price of the things people actually want in their life is going up 7%. So you guys want to know what real rates being negative means? This is it. The shit you actually need in your life is going up 7% a year in expense. And the 10-year U.S. Treasury is only paying you 4%. So I guess, like, in a weird way, shout out to all the boomers who are buying bonds because they're stealing from you. So I guess here's my point. The Which Way Western Man, going back to this, got a little animated there. Here's my point. My point is the U.S. government has to make a choice. Midterms 2026 is coming up. Trump is going to get his Fed chair. Liquidity problems are rising every single week now. Every single week, these episodes are breaking down where liquidity is dysfunctioning globally. Now it's Japan. The U.S. government has to make a choice. On one side, you continue to fight inflation, you continue to keep rates high, you don't provide the liquidity, and the financial system as we know it begins to deteriorate and collapse. We enter some form of austerity, and we go through a global reset. On the other side, they print the money. They backstop AI. They give the $2,000 stimulus checks. They deregulate the banks. The Fed cuts rates to as close to zero as reasonably possible. They give out the 50-year mortgage. Okay, everyone's pulling out of their 401k and the new crisis income required is 140 grand. Here, take stimulus checks. Oh, no one can afford their mortgage anymore and we're seeing delinquencies? Here, we'll establish a housing crisis and give you a 50-year mortgage, which should lower your monthly payments, raises the inevitable cost to own a home. You'll probably die in debt for your home, but at least you can afford your monthly payments now. Oh, AI is the only real growth that we have, and we need to grow our way out of this, quote unquote. Here, government backstop. Oh, we need to weaken the dollar, or else we can't unwind from being disrupted by China. We can't support the growth of AI. We need rates to go as close to zero as possible. Here, let me bully the Fed and, work my way to get everyone fired and implant my own Fed chair. So there has to be a choice made. And the thing I continue to predict and say on this show is the choice is they're going to print their way out. It's a soft default via inflation. And, I was at a social event this weekend and I was having a similar conversation. Like typically when I go out to a bar, it was actually I was going to say a friend of mine, but you guys know him, Dylan. So let me pull up the YouTube chat. It was Dylan's engagement party. So Dylan recently got engaged. So everyone should type in the chat, congratulations, Dylan. I was at Dylan's engagement party. And, you know, when I go out, sometimes people ask me macroeconomic questions. And I made the point, they were like, well, why is everyone voting for this? Why does everyone vote for printing the money? I said, you don't understand. If I ran for president and I said, here's what we're going to do. We're going to go through the worst level of depression we've ever been through because we deserve it. Because we're $38 trillion in debt. And we're like, we need a hard reset. And our lives are going to suck for the next 10 years. But then we're going to be so good and we're going to be built on proof of work and sound money and net production. And we're going to reindustrialize. The guy next to me running says, I'm just going to print money and give you a bunch of free shit. Who's going to win the election? So you guys have to understand, not only are politicians incentivized, but like the people are voting for this. Like if the people want to really go through pain and realize the losses and adopt something like Bitcoin, like we can vote for these things. So anyway, I love the congrats, Dylan, in the chat. I love it. Anyway, that's the which way Western man is. The everyday American is getting slaughtered right now. They have been in a recession for a very long time. All of the economic growth is coming from AI. It's coming from big tech. It's coming from the Mag 7. Trump has a lot of money printing if he wants to fix this problem. They have to cut rates. They have to start QE. They have to deregulate the banks. They have to hand out stimulus checks. They have to establish a housing crisis and create a 50-year mortgage. All of this is not my words. These are their words. And Bitcoin at 86,000? I'm supposed to freak out? Like, I'm sorry, I'm allergic to cats. I don't know what a dead cat bouncing even means. Not on this show. Not on this show. I'm bullish, guys. I really am. I think they got to print a lot of money. I think Bitcoin is sniffing out the liquidity problems that exist today, and they're real. Okay, strike stuff. Strike stuff, Michigan. Oops, hit my mic. Michigan. Lending is now available for you. Got our license, $10,000 minimum, up to 5 loans, as low as 9.5%. Congrats to everyone in Michigan. And as I said, we should be getting California, Texas, any week now. These are all before the end of the year dates for us. So very exciting on the strike side. The work on the line of credit has begun. The work on the yield on cash has begun. So very, very exciting times for Strike. I think Strike is very quickly becoming the Bitcoiners' bank, the best place for financial utility for you and your Bitcoin activity. Get a loan, buy Bitcoin, no fee DCA, no fee direct deposit, pay your bills. So very, 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 very exciting stuff. I don't know. Let me know if you guys have, I'm sure you have Strike questions, but the big one was Michigan. And I think we have like 5 core announcements before Christmas. So we're going to be announcing a few things a week. I'm almost positive. I will go into my notes now and see what the team is saying. They listen to this and they talk like, don't say that. Okay, let's see here. Okay, let me get out of this browser. Let's do some quick Q&A. Hey, look at me. I kept it pretty short today. I tried to keep the rant under an hour. And I did that, which is impressive for me. Okay, let's do some Q&A, shall we? Question, Jack, can you explain how and why Japan started this mess long ago? Will the USA go down the same path? It's very complicated. The biggest difference between Japan and the US is that Japan has a lot of assets. So they're actually very asset rich. Interestingly, they've kind of, to make a very long answer short, their monetary policy has been very unique and very different, and where they've kept rates, sometimes negative and at zero for a persistent period of time to stimulate, economic activity. But they have tons of actual assets. And so kind of the fear with Japan, like Japan is one of the largest holders of US debt in the world. And so the fear with Japan is what happens if that carry trade unwinds and everyone has to sell those assets, right? Like what if all of a sudden, everyone's been borrowing money for free in Japan and buying stocks and Bitcoin and treasuries and all this shit. What if all of that has to be sold? But remember, guys, this is kind of my point in saying that, U.S. assets are artificially strong, right? Meaning, if the U.S. wasn't the world reserve currency and capital outside foreign capital didn't get repatriated back in the United States, the stock market wouldn't be this high. I've said last episode, if you think the stock market is priced on PE and on retained earnings and on quarterly reports, you're a fucking moron. The stock market is a Ponzi savings account for the world. And so eventually these assets are going to have to correct to their natural, real utility value to the market, real price, real worth. So I guess the question is the U.S. going to get dragged down with it? The U.S. has benefited tremendously from this carry trade because the United States assets have gone bid up, which is great. Like the U.S. has loved the fact that basically the Bank of Japan has subsidized people borrowing money for free and punting it into NVIDIA. The U.S. loves that. So, I guess I don't understand the question, but all of this is going to have to unwind at some point, surely. I think you're already starting to see that. Like, that's why gold is outperforming equities, like, to such a degree, right? It's like, I think capital is starting to remonetize actual money. Like, stocks aren't money. Real estate isn't money. Gold is money. Bitcoin is money. So you're going to continue to see remonetization of actual money, and things that aren't actually money are going to get demonetized. Okay, let's see. Next question. Do you think the USA would bail out Japan from a financial implosion? Yeah, I think the United States is going to do everything it can to persist the empire. That's what we've said on this show, is that the U.S. is not going to let its Ponzi collapse. It's why America is what I've been calling it recently. Right? So yeah, I think the U.S. is going to do what it needs to do to stimulate the empire continuing, which, not to be overly harsh, I've said this before. I think red America was disrupted by China. I think blue America was disrupted by the internet. And I think there's going to be a lot of fighting and money printing and political warfare and, all sorts of violence, unfortunately, as this gets sorted out. These kind of wars of infighting. Like, middle of America, those jobs are in China. Blue America, the coasts, like the traditional media journalists, their job got disrupted by social media and influencers. Wall Street, their kick-ass performance got disrupted by Bitcoin. Bitcoin's totally flipping finance on its head. The white-collar worker, the accountant, the lawyer, the nurse, the whatever, university educated, they're all getting disrupted by AI. So you kind of have the internet disrupting blue America and the coasts. You have China disrupting red America and the non-university educated manual labor jobs. Eventually, when the dust settles, I think you have the internet versus China. That's where I think the world's going. And so I think it's very important that we do have some version of the West. Democracy, freedom of speech, property rights. Okay. freedom, equality, inclusion. You know, I'm not a fan of the CCP. I do not think China is the future of the world. I think that would be a very dark, gloomy world. So, anyways, to answer the question, do I think the U.S. could bail out Japan? Yes, I think that we'll continue to see desperate attempts to prolong the empire. But what I think is inevitable is the way this all kind of settles is you'll have the internet, which is the new West. Bitcoin, to me, is the new house on the hill. You know, everyone was migrating to the United States for opportunity, hope, inclusion, freedom of speech, property rights. People migrate from other countries, Statue of Liberty, and come to America for that. I see people migrating to Bitcoin now for that. They're migrating to Bitcoin for hope, for inclusion, for equality, for freedom of speech, for property rights, for transparency, for truth. So that's what I think the future is. And until we get there, you're going to see a lot. And then I think the internet will outcompete China for the future. Like, I think more people in China will want to be a part of the World Wide Web than people that are free on the internet will want to be a part of the CCP. But I think that's the next frontier. And until we get there, it's going to be really nasty. Money printing, political violence, societal violence. Unfortunately, it's just, you know, when empires fall. I understand that Bitcoin is ultra sensitive to these macro liquidity moves. It's the barometer. Yes, I love that. Correct. But when does it start reacting in more of a safe haven way? And why has gold behaved so differently? Yeah, I mean, when does it start acting differently? I don't know the answer to that. If the market were rational and smart, yesterday. But it is interesting because the way the world seems to be pricing Bitcoin as like a hard money equity. It's kind of this, and I've said it before, Bitcoin is kind of this technology plus fiat liquidity. That's been my equation in my brain, is like Bitcoin equals technology plus fiat liquidity. And the reason for that is, you know, there is a tech component to it where new technology, Satoshi solved what was thought to be an impossible computer science problem, and he solved it. And because of that, there's a lot of industries that are going to be disrupted. There's a lot of dematerialization going on. There's a lot of new opportunity and new businesses that are to be created. And so the market is almost taking the fiat liquidity piece is what you're talking about. Safe haven, gold. It's the most finite, scarce thing we've ever invented, period. Nothing's ever come close. It's the only literally limited supply money we've ever come across as a species. And so the market is trying to figure out what combination of technology and fiat liquidity it is. If it was only fiat liquidity, it would behave a lot more like gold. If it was only technology, it would behave a lot more like equities. But for some reason, it's kind of priced as both. In my opinion, it's weighted way too much like technology when it shouldn't be, but it is. And so you kind of have this like 50% hard money fiat liquidity and then 25% technology, 25%, you know, retail, speculative GME type behavior. And that's just where it is today. I don't know when that will change. I mean, obviously, listen, when we've talked in prior episodes and we've said, you know, this has been a record level of selling and new distribution, like over 5% of the Bitcoin supply changed hands in the month of November. That's an insane amount of distribution. And we know that the ETF flows are eating into a lot of this. Corporations like 21 or like Strategy are eating into a lot of this. And so a lot of the market participants that I would say aren't very sophisticated. They're being rotated out of the asset class. And so, you know, gold is a much more mature asset, not just in how long it's been around, but who's holding it, who has monetized it. You're talking about governments, central banks, funds. Now, what was really important about Bitcoin is it was distributed initially to the people. It's critical, or else Bitcoin would have failed. If Satoshi would have IPO'd Bitcoin with Goldman Sachs when he solved the Byzantine generals problem, then Bitcoin would have never worked. Goldman Sachs would have 25% of the supply. BlackRock would have the other 25%. I mean, it would have never gotten distributed to you and I. And so the fact that it did is really important, but that carries along with it very unsophisticated investor base. And so as the asset matures and those holding it mature, it starts to behave very different. Right now, it's very speculative, very risk on, very like tech plus hard money, which is fine. Listen, at the end of the day, over these, 4-year periods, 4, 5, 10-year, whatever you're measuring Bitcoin in, it's the dominant monster performer. It's not the worst thing in the world, but I think that explains it. And as we get ETFs and institutions and more sophisticated investors holding it, it will start to behave much differently. Like we saw, like the level of outflows given Bitcoin's price action versus inflows, it was very impressive. Like it's barely at all. It says a lot about who these ETF investors are and how they treat Bitcoin differently than retail. Okay, next question for Jack. I'm a senior in a bachelor's degree in computer science. In your opinion, as the CEO of 2 tech companies, what is your outlook on the entry-level job market for software jobs? Oh, shit. I don't know, man. I'm worried about AI. I'm worried about AI displacing entry-level white-collar jobs, software, legal. But to be honest, as I said earlier, and this is just me being honest, dude, like Strike, I had one real job before Strike. I was a software engineer / design. I don't know. I was like building this product at a startup in Chicago. And so I don't have that much experience. I know for us at Strike, like we hire software engineers all the time. 21 will be hiring software engineers at some point in the future. So from my experience, it's fine. I shouldn't be the expert, to be candid. Like I don't have 20 years of startup experience. I don't talk to all my friends in Silicon Valley. Like I don't talk to those people. So you take it for what it's worth as a Bitcoiner talking about AI. So that's a fancy way of saying I'm not an AI expert. It worries me. It concerns me for sure. But I'm hiring engineers. So I wish you the best of luck and thanks for tuning in. And at the end of the day too, finding a way to be a net producer in society, I'm hardworking, proof of work, principled, honest people will figure that out. Meaning, how can you find a way to produce more value than you consume from the world? How can you provide value to those around you? And right now, it seems like you're seeking to do that through software. And I'm sure there's a way to do that. And if there ends up not being a way to do that, which sounds insane, and I doubt that, I'm sure there'll be a way for you to be able to achieve that, is my point. Like the AI doom and gloom is a little oversold, but I do think it's real that the government is backstopping a tiny, tiny tech oligarch to basically displace like half of the Americans working. That's like really crazy. Oh, man, it's fucked up. Sorry, I got to be honest. But I wish you the best of luck, dude, and you should apply to Strike. We're always hiring. Maybe you get approved here. How is a stablecoin / Bitcoin / gold world better than this fiat world? Do you think stablecoins are just a bridge to a Bitcoin standard? I can't tell if that's a trick question or not. Are you fucking with me? Is this you got punked? How is a stablecoin Bitcoin gold world better than fiat? Pretty simple. You can't print Bitcoin. So, listen, stablecoins, how do I say? Here's what Tether invented. One of Satoshi's ingenious inventions is Satoshi created a monetary network. Let me try and convey the relevance here. Gold is a monetary asset, okay? What is gold's monetary network? Gold's monetary network are us humans, our legs and feet, okay? In order to move gold and achieve gold settlement, you have to walk it across town to your butcher, to your grocer, to your tailor. You have to ship it across the ocean to the country you're trading with. You have to fly it across the world to the person you're purchasing oil from. Gold has no monetary network. Humans were the gold and are the gold monetary network. And for that reason, gold failed. Because in order to scale gold digitally, we had to concentrate it in central banks, in governments, and in corporations so that we can build digital payments on top of it. And it's for that reason gold got demonetized. Bitcoin, conversely, is different. Why? Bitcoin is both, listen closely, a monetary asset like gold and a monetary network. I can achieve settlement with Bitcoin without needing to trust a bank, a government, or a central bank. And I don't need to walk it across the world. I don't need to ship it to India. You see? Huge innovation, massive. So this idea that it's both a digital money and a digital network. It's a network that can settle peer-to-peer with no intermediaries. What Tether did is they said, okay, everyone has access to these digital networks now. We're going to take the most popular financial product ever, which is the US dollar, and we're going to put it on top of this new innovation that is the network, not the asset, obviously. The asset is Bitcoin, but we're going to put the dollar on top of the network. And the idea in that is that everyone around the world has had insane demand for the US dollar. Everyone. Like the dollar trades at an insane premium in every black market across the world, in Nigeria, in Argentina, in Turkey. But they can't have access to it because you cannot export the dollar over the ACH network, over the FedWire network. They don't have access to this shit. But the ingenious idea that Tether had was, wait a second, everyone now has access to a monetary network that can achieve money movement and settlement. So we're just going to take the most popular product in financial history and put it on this new network. And that way, everyone in the world gets access to the most popular financial product of all time. Does that make sense? That is very different than the base monetary unit being fiat versus Bitcoin. Bitcoin, you can't make any more of it. So the world is fundamentally different because you cannot debase it. You cannot bail people out. You cannot print any more of it. And so I guess I don't understand the question, but sometimes when people compare stable coins and Bitcoin, they're not one-to-one. Like, they're not competitive. Tether is a bank, effectively. Listen, everything I just said, I've never run by them. Like, hey, this is how I'm going to talk about Tether. These are all my own opinions, and I don't actually know if they're a bank or not or how they're regulated. I have no idea. I don't work for Tether. They're just a business partner with me in 21. I spend a lot of time with them. I love them as friends. I'm not really familiar with their business that much. But think of them like a bank, okay? Tether is a bank. They compete with JP Morgan, for example. And Tether is better at servicing the dollar globally and better at monetizing the dollar globally than JP Morgan is. And they're doing it predominantly because of they were able to make use of this new monetary network technology at the end of the day. They took the dollar product and they put it on new technology, which made it cheaper, faster, and easier for people all over the world to get access to the thing that they've been in demand for. That has like very little or nothing to do with Bitcoin. Tether just took the monetary network part of Satoshi's invention and sold the dollar on top of it, which I don't use Tether. I'm not that interested in stablecoins, if at all. Like, I don't really give a fuck. I'm American. I did get to bank by Chase, but in theory, I have easy access to dollars and stuff, you know? So I don't know. I don't find them competitive. And so then the question kind of like materializes as what's the difference between Bitcoin and fiat? I mean, I can't tell if you're fucking with me. You can, one is hard money, the other is easy money. I don't know. Hopefully that answer suffices. You can follow up if I didn't. That was my interpretation of what you wanted me to say or what answer you were looking for. Okay. Next question. Are we in the quote, and then they fight you, end quote stage, or the, and then they join you stage? Probably both. I mean, it's gotten to the point where it kind of depends on who's in office. Like with Trump, it's and then they join you. If the Dems win again, it wouldn't be surprised, or I wouldn't be surprised if it's and then they fight you again. Who knows? Like, is me getting debanked by Chase they're back to fighting? Some people on the internet are conspiring that. I have no idea. They never told me why. And I don't know. I'll probably never know. So I think it's contextual. But the most important thing is I don't think it really matters that much. Like, I've been in Bitcoin for 13 years, and they've been fighting and joining and lying and thising and thatting and blah, 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 blah. And all Bitcoin's done is go up as long as I remained humble and I stacked sats. So I don't know. It doesn't matter. People on the internet got more upset that I got debanked by Chase than I did. I just framed it. Here, I told you guys I'd show you the frame. Oh, crap. It's got the address it was issued to, which thankfully isn't my address, but I still don't want to show it. Oh, shit. Okay. Here it is. Yeah, so I don't know. You know, people can fight me all day long. As long as you don't put a bullet in my head, whatever, fight me, debank me. I don't give a fuck. I don't care. So I would say it depends on who you're talking about, but nonetheless, it really doesn't matter. Bitcoin's going to win. If Bitcoin is supposed to be the solution to the current debt and monetary problems, why should we expect it to go up during those crises rather than being dragged down by them like everything else? Well, it depends your time frame. Bitcoin is very likely to get dragged down with everything else in like a Great Depression crisis immediately, like in the first, like everything's going to go down. But then on the other side of it all, listen, I'm bullish Bitcoin in the sense that it's the best money we've ever seen. And so money competes. There's inevitably one money. There's one good in the market that humans want to collectively price and exchange and store their time and energy. That's it. And to me, I see no evidence as to, one, why Bitcoin hasn't already been winning in that competition, going from zero to $1.8 trillion in 16 years. It's been kicking everything else's ass. And two, I don't see why it won't continue to do that. That's as far as my Bitcoin thesis goes. And so, yeah, if there is a serious depression, everything, including gold, everything is going to go down. And then we're going to have to remonetize and build society back up again. Or the other way, which I think is going to happen and has happened and will continue to happen, is they'll default via inflation and through money printing, and Bitcoin will continue to be monetized through that. So either way, you know, that's the which way Western man. Like, you know, there's two evils here. Which way do you want to walk? Do you want to default hard, or do you want to default soft? But it's a default nonetheless, and I think Bitcoin's going to win this competition. What do you mean by this cycle? Yeah, that's a good question, honestly. I guess I still consider us in a cycle since bottoming out around that 16K range. I don't think a fall from, 126 to 80 is a bear market, and this is a new cycle. I think, Bitcoin breaking trend and falling, 50 plus, 60, 70% is a new cycle. But I guess that's a good question. Like, I do think these kind of 4-year cycles are over. And so, as you ask that question, I guess I sound kind of dumb talking in cycles. I guess, like, to me, I think a lot of crypto, Bitcoiners, even like, risk investors, speculative punters, they looked at Bitcoin going from 16K to 126K as a liquidity cycle. But mind you, we were in the middle of QT while we did that. We only did that because of fiscal dominance, because of the treasury, because of everything we've talked about. And we're just now starting a new liquidity cycle where rates are coming down, QT's ending, QE starting. And so to me, we're still in this cycle of like, the end of the last cycle was when Jerome Powell said, I got to fight inflation after this COVID mess. Like inflation, we're like rivaling inflation in like Zimbabwe. And like, I got to fight this shit. And I'm raising rates as fast as I possibly can. That was the end of the cycle. Like assets are going to get crushed. The dollar is going to strengthen. Inflation is going to come down. The Fed's going to tighten. And now we're still in this like 126K to me is like the appetizer, because that was the all-time high we made in dollar terms without monetary policy changing at all. And we didn't even make... Fuck, you guys are going to make me make this episode long. Fuck it. Let me pull up a chart I want to show you. Let's see. Trading view. BTC USD against XAU USD. So this is Bitcoin priced in gold. Let's make this align. There we go. And this is monthly, so very long time frame. So you can see Bitcoin's been demonetizing gold ever since it was invented, and it makes these highs and then redistribution. And again, you can't print Bitcoin out of a factory. You can't dig it out of the ground. And so you get the new supply from the market. And so what Bitcoin does is it enters this price discovery like this. And then eventually it finds new supply from people that have it. And they go, fine, fuck it. I'll sell Bitcoin for a house, for a car, to pay off debt, to buy a sports team, whatever. And you get this redistribution where there's now the market has found supply where people are willing to sell. And then it comes down and then up and then down. And then my point is we haven't really made new highs yet. And my argument here is that, again, the Fed has been in QT. Like, the dollar has been strong. Like, we only have gotten this little whatever this is here because of fiscal dominance, because the Treasury has stimulated. And so I think we are still, like, in the process of, like, a massive move up. And so when you look at Bitcoin in dollars, it's very misleading because you're like, oh, we made a high of 126 and maybe there's diminishing returns as Bitcoin matures and 4-year cycles, bro. But to me, we're still in this cycle, which is like, we still like haven't really made new highs yet in gold. Like, I think we're going like way higher in gold terms. And, gold usually leads, Bitcoin catches up. And so to me, this is like the cycle is like, we're going to chop around and eventually like break out and make highs. I don't know, 60 ounces, 80 ounces per Bitcoin. So I don't know. That's like quite literally what I mean, if that makes sense. Okay, Strike questions. For Jack's Q&A, high yield savings account inside Strike sounds cool. Fiat rainy day fund, etc. But using the yield from other customers sounds a little too similar to what BlockFi did. What say you? I don't think it's similar to what BlockFi did at all. What BlockFi did is take your Bitcoin deposit and lend it out. That is not what I will ever do. Ever do. What we are offering customers is saying this. Right now, our lending business is people give us double collateral on their Bitcoin loan. So they're able to take out half of the worth of their Bitcoin as a loan. So let's say they give me $100,000 worth of Bitcoin and I allow them to take a $50,000 loan. So it is a over collateralized loan. There is little to no risk for me because I have the collateral. If they don't repay me, if something goes wrong, I can't lose, right? As the lender. And the way I do this is I work with large institutions and banks to source the dollars. So I'm giving out hundreds of millions of dollars worth of loans, soon to be billions of dollars worth of loans. And institutions are saying, Jack, can we get a 5%, a 6%, a 7%, an 8% return on the cash we give you? Because that is giving us more risk-free returns than if we were to lend it to the Fed or to the US government, right? If we were to buy a T-bill or a 10-year bond, you can give us a better return. And I say, yeah, of course. And so then when I see everyone asking, hey, Jack, I want yield on my cash too, I was like, oh, well, why don't we let our individual customers get in on the deal that all the institutions are getting in on? Where if you want your dollars to go into the pool that we lend out as severely over-collateralized loans against Bitcoin, you're more than welcome to. And we'll give you these really attractive rates that are far better than, you know, what Robinhood or Coinbase or any of these companies are giving you, because they're taking your money and overnight lending it via the banking system to the U.S. government. And the U.S. government's paying you whatever the Fed funds rate is. We're lending it to Bitcoiners who are net producers and wealthy and can afford higher rates. And so but what BlockFi did was take your Bitcoin deposit and lend it out and rehypothecate it. I would never, ever, 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 ever do that, ever. This is very different. And so the way the product is going to work is you have cash on strike. If you want 5, 6, 7%, whatever we end up offering, you know, we'll have to get closer to the product launch, but you want something substantially larger than what anyone else can give you, and you're getting it from an over collateralized loan. So you're not taking risk on it. We have the collateral and we're lending against the collateral, over collateralized loan. You're more than welcome. And then if you ever want to withdraw, what we do is you hit the button. I take an institution's capital, like a bank's capital, and I swap it with yours. So the customers will get, you guys will get priority. If you want in, I take your money, I put it in, I kick the bank's money out, and now you guys are earning this yield because you are helping fund the loans. And then if you guys say, okay, rainy day fund, well, it rained. My daughter broke her nose, I don't know, whatever. Something happened. Then I put the bank's money back in and you withdraw your money. That's how the product works. So it's basically you guys are part of the product that I've already been building with all these large institutions. Nothing, not like BlockFi at all. Let me know if that makes sense, because if it doesn't, it's really important that eventually it does. Strike in New York updates. We're almost there. We've been working really diligently with New York. We've been told we're at the last mile, last lap. We're like literally right there. That's what they've mentioned to us. So we feel very close, and we feel more confident than ever. But yeah, that's unfortunately all I have for you guys today. Jack, after running a private company in Strike, how does a public company differ? Jeez. There's just a lot more involved outside of building the products and, you know, building the stuff. Like at Strike, you know, we are heads down. I don't think there's a company in the space that has higher product velocity than Strike. We have a very clear vision, very clear leadership, and we just keep our head down and we build fast, strong, and it's a really different way of building than building out in the open, where when you're a public company, your company is literally for sale. Like anyone in the world can buy your company. And so, you know, whether it's disclosures, lawyers, I mean, even this approval process, like our approval was delayed because the government shut down. Like the government shutdown didn't affect Strike at all. Who gives a fuck? We're going to keep building shit. We're going to get you guys lending in California. We're going to get live in New York. We're going to give you a line of credit on your Bitcoin. We're going to give you yield on cash that the Fed could dream of. Like we're going to, right? And so you're just very different. But obviously, Strike doesn't have the benefit of access to cheap capital in the capital markets. So just different trade-offs. But for that reason, whenever people ask me, am I going to combine the businesses? The answer is no, at least not right now. It doesn't make sense to me. Strike benefits tremendously for being private, and 21 benefits tremendously for attempting and hopefully soon being public. So, I don't know. Okay. Will the new line of credit and Strike have the same state minimums as the loans? I don't want to commit to anything just yet, because then I'll just be an asshole if I have to revert on it. I would say give me like a few more weeks and I will be able to be a little bit more communicative on the product and what to expect. But the goal of the product, listen, the line of credit solves for not needing to take out a 12-month massive loan all at once. It is for the Bitcoiner that wants to live as Bitcoin, with Bitcoin as their base money. You know, you have 50, 60, 70, 80, 90% of your net worth in Bitcoin. And as a bill comes in, you just want a little bit of credit automatically created to pay off the bill. And when your paycheck comes in, you can pay that off or handle the interest. And it's an ability it maximizes your ability to own more Bitcoin. And that ultimately is one of our jobs at Strike, is to help you be happier, more free, wealthier, in control of your future more. And that's the goal of the product. And so as low as we can make the minimums, we're going to try and do that. As low as we can make the pricing, we're going to try and do that. Because this product specifically is, I think, our best innovation for people to live on Bitcoin. I think it's going to change the world in that respect. Okay. I'm definitely not going to answer that one. Any new info on the 21 launch? And then another question is, where can we vote for the XXI shareholder vote? Yeah, so I said the same thing. You know, I was talking to our lawyers this morning, and I said, honestly, I might post a video on Twitter for a few reasons. One, I'm not sure people know they can vote, and I'm not sure people know how to vote. And two, it's actually really cool because usually in these SPAC things, they're like, the bag holders are these institutions and they own majority of the equity or all of the equity. And so these votes never matter. But for us, it's very unique. Like people have accused us of like, oh, some institution dumped this, some institution did that. Like when you look at the outstanding shares that exist in CEP, it's like almost all retail. It's like individuals, people. Like there is no institutional concentration of anything. So one, I think that's really cool. Like we are trying to be like the Bitcoin equity built by Bitcoiners. And the bottoms up movement resonates with me, with the business, and with Bitcoin. So one, that's cool. Two, yes, you can vote. So our shareholder meeting for the business combination is on Wednesday, and specifically 10 a.m. Wednesday. So it's not even like end of day Wednesday. So you would need to vote before then. And then how you vote depends on how you purchase the stock. So, you know, for example, if you bought it from Robinhood, you can go vote inside of Robinhood. If you bought it from a broker, you can contact the broker and request to have your voting control number to approve. But the point that everyone should know is that if you want XXI to list on a stock exchange soon, this is like the final step to doing that. And so as a shareholder, you know, you can voice your support for the business to get approved and for us to list on an exchange and officially start as 21. You can voice that support by voting. And so if you are a shareholder, you know, I would appreciate you voting, but I very, very seriously cannot tell you guys how to vote. I can encourage you to vote, and I can let you know that if everything gets approved, we will list, and Tether and I will officially be able to run this company in the public markets, whereas today we have not been able to do that. We have not technically started. We've been waiting for the transaction to close. So, does that answer your question? Or let's see what Dylan has to say. My lips are dry. Oh, here's a funny question. Thoughts on the Cash App move into Bitcoin features? I don't know. It seems like every Bitcoin company's best ideas come from me. That's what I'll say. I think it's great. I mean, once upon a time, someone once said, same team, and I believe that still to this day. I mean, everything that's good for Bitcoin is good for Strike. But I don't know. A lot of these we have all of these features already, or we've launched these a while ago. So I'm glad to see companies kind of view Bitcoin the same way we do. I think and I'm not being condescending. I genuinely think it's a good thing. Cash App has always been in a position to onboard a tremendous amount of Bitcoiners. And I think it's incredible that, one, they already have, and two, they'll continue to do so. But when people tweet at me like, Cash App waived fees on DCA, what are you going to do about that? Like, well, we did that a really long time ago. So yeah, I think our job at Strike is to continue to innovate and create innovative products and, march the industry forward in what we think is the right direction. And when we see other companies, it's not just Cash App, a lot of companies that are now doing direct deposit and bill pay and all sorts of stuff, I think it's cool. I think it's great. And we've certainly taken insights from other companies and innovated on the back of other people. So I don't know. I don't know what you guys want me to say to that one. I think it's cool. I think we're still very different in who we're serving. But yeah, it's good. It's good for the Bitcoin ecosystem. But I don't know. If you're going to give me a layup, I will say I love seeing my ideas implemented in companies outside of my own. It's validating. Same team. Know what I mean? Okay. Cool. I think that's it. And with that, I am probably going to record a video and put it on Twitter so that all of the 21, technically Cantor Equity Partner investors know that you can vote, and that, if you want 21 to get approved, all you got to do is vote, and then we'll go list the stock on an exchange, and we'll get this show on the road. So to be honest, I will probably just go get some water and put some chapstick on and go record that video. But with that, this concludes another episode. Much love to you guys, as always. Give me feedback in the comments. This one was a little short. In hindsight, Q&A was maybe a little long and the rants were a little short. So I'll take that into next episode. But give me feedback. Let me know how you're feeling, what you want me to talk about. The good, the bad, and the ugly. It doesn't hurt my feelings. I just appreciate the fact that we have this opportunity every week. It is the most interesting corner of the internet, what we got going here. So I love and appreciate you guys, and I'll see you next week, okay? Peace.